Hey, what's happening?
Hey, you alright? Slow day. Who's trading today? Anyone
I
trading
haven't
today?
seen anything.
I may have put a little trade on GN earlier, but
Ah,
I just took my chips and went back to chilling.
right, right. Okay, okay. That's interesting. Are we live? I think we're live as well. Let's have a look if that's the case. Might be live on YouTube. Right, let's get some charts up. See what's going on. I thought we might cover a few things because it'll be quiet today. But I thought we might be able to cover some strategies and some ideas that you guys may have as well. I figured that maybe do that for an hour or so, and you'll get some usage. Might help tweak your game.
Let's do it.
Yeah. Okay. Let's just set this up. Okay, that's there. That's there. Let's get some charts up. What was that cheeky little trade that you took? What is that on? Sorry, what was that? I missed it.
GBP and GB.
Oh right, okay. Pound New Zealand. And how's that been moving today?
It's been moving a bit. It's still been moving a bit choppy. Like I did get on it for a buy, and then it went about 10, 11 pips in profit, then started to retrace, so I just cut it, and then it seemed like it sold off to then just buy up even more. But I missed that entry, so I was like, okay, I'm just gonna leave it.
Fair enough.
Yeah, the way GN moves, it's like I like it, but it's a very bipolar pair.
Yeah, it can be a little bit choppy, a little bit volatile, and just mess about sometimes. Discord. Let's
What
put.
are what are your favorite pairs to trade? Is it mainly gold, or do you tend to?
Yeah, the stock markets like the Dow Jones, gold, a few forex pairs. That first Friday when they announced the vaccine news, I was actually short on the pound New Zealand, and it spiked down with that news. Stock markets went up, so I cashed out on pound New Zealand. You know what? I don't even think I've included the pound New Zealand in my journal. I just realised that. I thought it wasn't quite right. So this is what happens when you don't update things as you're supposed to religiously. See, I've missed one off. Yeah, I missed it off. Didn't make sense. I thought so. The numbers didn't add up, and I thought, oh, it's probably because I was scalping and hard to justify and make sense of it. Okay. Yeah. So now I know. I'm missing one. Right. Need to. That was Monday. No, I didn't. No, I've got it on there. No, I didn't forget it. There you go. That's made me panic there. Yeah, short at 193. What's the price now on it? Without looking.
Let's see.
On GN?
Right now
Yeah.
it's 1907.99.
Okay. Yeah, so I shorted at 193, stop at 193.50. First target was 192.35, and then second target was 191. I mean, it spiked down and it became a little bit volatile, so just took some profit. In the end, I think I took about, like I say, I took about 60 pips off it. There was no movement in the first hour. I got in just at the close of 9:57, just at the close of 10 o'clock, which wasn't the best time, really. I should have waited just a few minutes after, maybe 3 minutes after the first hour, just to see it go up, because it went up a little bit, and it went up to 93.15 and 20, and it was just sitting sort of just up there, and then it kept coming down again to near 193, and it was going up, but it was ranging just above. And then I recorded the high was about 193.21, so I thought, this is a dead trade, it's not doing what I want it to do. We had a bit of a move down on the pound, and pretty much as I got in, it just went to sleep. So I thought, oh no, this is not good timing. So I moved the stop down to 93.25. So I halved the stop loss from 50 pips to 25 pips. And then it sold off. It just spiked down. I was like, what is going on? That was my first sort of inkling about the news. And then so I sold that off, and I thought, okay, we'll cash out on that one and focus on like the Dow Jones. So I went from the forex pairs, I moved over to the Dow, and I started trading that, which was far more lucrative. And then shortly after doing that, I shorted gold, because that started falling. That was the order of play on that day. And then after I'd done a lot on gold and the Dow, I just kept an eye on it. Tuesday we consolidated, and then Tuesday night we just got back into it all again and having a look. It was good. It was really, really good. It's been a good month. There's been a lot of good stuff going on. So, I mean, like today, you know, compare it to days like this week. I knew this week was going to be flat and a little bit choppy, but we had, thankfully, we did have one play left, which we were thinking would be gold if it broke, and it did. And so, because it did, we jumped on it and were able to make the most of it, really, and that was really, really good. So I was really, really happy that we've been able to capitalise, because everything else has been pretty rubbish, and so yeah, just nice to see and make the most of it. So I think compared today to the few weeks ago, or with your trading experience, compare good days to bad days where stuff is happening, to days like today, and you can then say, you know what, today's not even a day you should be trading, because it's dead and there's no point. You could do some back testing and just look at how things are moving or setting up, or do some other work. We did the live session yesterday for about 2-3 hours, and during that time it was about 80% was just talking psychology, trying things, doing some analysis, and about 20% of it, not even, was just a few live trades on gold. They just set up and we shorted it pretty much sniper entry, got in short, made some money, and it was all over and done with within like a few minutes, really. And that was what trading, that's what trading should be. Instead of like looking to force something in a market where conditions are just not good for it, and there's not going to be anything happening later. It's Thanksgiving, so just compare it. But you can stick around, you can take a look, and you can sort of remember notes and say, okay, this is what a dead market looks like, and then compare it to a day where everything is moving and it's just a never-ending buffet of opportunities, and then that way you sort of get an idea and say, today's pretty rubbish, I'm not going to trade today, or I'll stick around for now, but I've got things to do, so I'm going to get on, live my life and do normal real world stuff, whatever that may be, business or chores or just some recreational time, and so that way you're enjoying your sort of work-life balance. Otherwise you sit and you look at charts, whether it's raining, sunny, whether the markets are moving, flat, you just always just sat, and it's like, well, that's not, you're not benefiting from it, because it's not, you're not benefiting if you end up just trading and you're not actually learning, because if you're trading, it consumes a lot of your attention and energy and time. And so for doing that, doing that, you're forsaking other aspects of your life, or perhaps sacrificing that time that you could be using to better yourself, or to try some things out, backtest, because you're all consumed in a trade that might generate you a few quid, or or just result in a loss, or just I don't know, just be like, okay, it could just end up being an unproductive. Just make sure that when you're spending time doing stuff in this business, it's productive. If at any point, always ask that question of yourself, and if at any point you feel it's not productive, drop it out and just move on and go and do something else. And that's the beautiful thing about being your own boss. You don't need to then answer to anybody. And I like that.
And you kind of need to tell yourself when to stop sometimes.
Yeah.
Yeah, I actually do that sometimes. I go and listen to like my dad lessons and then have just psychology work or something like that.
Yeah. And strategies, you could backtest your strategy, or think about, actually, what is my strategy, what am I doing, and maybe just tweak that. Yeah. Let's stick that on there. Let's make sure people are aware. I think most of you Americans aren't going to be doing much, are you, today? Relaxing, right? Eating some poor defenceless turkey. Where?
Oh man, I'm Canada right here.
Oh yeah, yeah. So
Yeah.
anyone from America? Did any Americans
Yeah,
actually get up to
I used to go to school there after my GCSE. Got a football scholarship there for in after year.
where?
So DC in Maryland.
Oh, nice.
So
Did you go? Yeah. Was it good? Did you
yeah,
enjoy it?
yeah. It was great. It was great. The experience was good. Definitely like a new environment and things like that. So it was definitely enjoyable. And then I came back to London for uni.
Okay.
It was probably a good decision because when I left is when Trump started going in and doing all his madness.
Okay. Okay. Well, they're just announcing the tier structure, aren't they? For the UK. So London's on tier 2 alerts.
Yeah, I heard about that.
Kent is on a tier 3. Yeah. Anyone in England here? Anyone here of your, what sort of alerts you're on, or what restrictions are going to be in place around?
In London, I'm
Yeah.
not too sure. What you said tier two.
Yeah, London's tier 2. That's no big deal.
Yeah, my uni is in Oxford, but I literally haven't been there like all semester because I think they just had multiple corona cases over, so their tier has been higher
Okay.
this time. Yeah, I've
Okay.
just been doing like online uni and then trading, so it's
Yeah.
actually been a lot more beneficial to me
Okay.
to spending time in the class.
Oxford's nice.
Yeah, for sure it is nice. It is nice. Just like right now, it's just a bit quiet, I guess, because with all the they had like a lot more cases around Oxford and Swindon, so I guess when people first came, they just ended up going straight back home because it was all locked down already.
Yeah. Fair.
It
Yeah.
wasn't too intense.
Yeah, places I've noticed just from listening to people in in this group from all over the world. Everyone's had some form of lockdown, locally or otherwise. It has affected a lot of people around the world. Australia, America, Canada. There's
I
not.
think we're probably the only ones. Like I live in northern Canada, and I think we're just starting to enforce like some kind of social distancing measures, but like it hasn't affected us whatsoever. Like even our economy has been booming here.
Well, how far north are you?
Well, not like crazy far north. Like, I mean, we're central Alberta, Canada. So
Okay.
look at a map, I guess. Yeah. Like Edmonton is Alberta's capital. They got like a couple million people in Edmonton or something.
Yeah.
And
How near are
we're
you?
about a 2 hours drive.
Okay.
And I mean, the city I live in is small. Like we're like 70,000 people or something. And I think there's been for months and months there was like one, two, three cases maybe. And I think just now there's maybe like 10 or something.
Okay. So it's not been too bad at all, really. Yeah. That's good. You
Yeah,
know.
yeah, no,
That's
like
really good.
I own a different business too, and like all of our businesses and everyone is still been doing great. It's actually it's our best year in business in 11 years.
Really. That's strange, isn't it? How things like that happen.
I know it's weird, man. Like I build houses and I do construction work, and
Yeah.
everyone,
Yeah. I remember you saying. Yeah.
yeah,
Um.
it's been a weird year.
How do you find? You know, how much disruption do you have in the winter when you're trying to build?
Yeah, so I mean, we still build. It's about 20 times slower though. Like we might do 5 projects between October and April
Okay.
versus 80 projects on the other months.
Okay.
So, I mean, I usually take about 2 months off, and I'm still in that off time. Like around Halloween, I started doing nothing. Like I, shut things down, and I'm like, okay, we're taking like 2 months off, and my plan was to focus on forex, which is what I've been doing. So
What? How busy is it? How populated is it up here in the Northwest Territories?
it's spread out, but like we're in oil field country, so like there's a lot of money. Like everyone has a lot of possessions. Like everyone's very wealthy around where I live. You know, yeah, yeah. Like everyone works in the oil field,
Yeah.
and like so the houses that I build and renovate are typically very large houses. Like no less than 5 bedrooms, I would say. Like
That's good.
at least.
That's nice.
Yeah, yeah. There's some monster houses too, right? So
So I mean, in terms of yeah, but then I suppose you have to take the rough with the smooth because you have all that land. It's vast, and you have it's oil-rich country. But then there's not really much in the way of population. Or I mean, do you feel like it's still busy and populated and plenty to do,
yeah,
and it's okay?
like for where I live, it's it's basically city life. It's just not a huge sprawling city. You know what I mean?
Yeah.
Like there's still a few skyscrapers and whatever. But like if I go to like Edmonton, there's a couple million people there, and like that's like a city, right? Like that's you get lost in the rat race, and at least where I live, like you still feel like you can make a difference.
Yeah.
If that makes sense.
Yeah. No, that's cool.
I mean, there's lots and lots of farms, like not even just farms, just people that own land,
Yeah.
surrounding me.
I really like being able to connect with people from all over the world and really appreciate and value this and being able to do this like never before. I mean, because of the internet, and it's great. And I've forged good friendships with fellow traders over the world, throughout the world, and I've over the years caught up with some of them in different countries as well. So been to
Yeah, I know.
America
I'm
and
gonna do the same.
yeah, no, it's good. You know, I did it in Canada, did it in America, Australia, New Zealand. Yeah, it was good. It
Did you do
has
it
been
here in
good.
the UK, I
Yeah,
assume?
yeah, yeah. London.
Yeah, cool. Yeah, I think London is like, the more I learn about trading and stuff, I'm no expert by any means, but like, it just seems like time zone wise, like if I want to take this extremely seriously, it's either I need to have a fucked up sleep schedule or I just need to come over to London.
I know. I was listening to Rob in his video, and he was just talking about how he wakes up at 4 now, and then it's
Yeah,
like from
me
4,
too, man.
and then he's
Yeah,
like saying,
I
"Which,
don't know. So
yeah."
earlier I've been getting up a bit too late sometimes, and I feel like I'm missing news that I should have been on the charts. Therefore, just because I've woken up a bit too late and stuff.
Yeah,
Well, he was saying he wants to get up at like 2 o'clock. So I've just
yeah. Like if I
sent him
woke
a
up
message.
at 1 in the morning, that
Yeah,
would be perfect for me because I
perfect
can
for
have
yeah.
hours of
Okay,
like 11 a.m. my time
yeah.
until like 10 o'clock at night, which is like the time I'm awake, is like the shittiest trading time.
But yeah, if you were around during the lunch, like US traders get up at like 6 in the morning, 6 7, depending where you are. I suppose over this side you're what 7 hours behind the UK, London, 2 hours behind New York. Is it where you are?
6:30 a.m. where I am. Yeah.
Yeah. So yeah, so 7 hours. Cause yeah, so mm,
Yeah, so I would like to be up and watching and trading for the London session, which is like 1 in the morning for me.
I think you can still make money trading at getting up at like 6 in the morning where you are. You get up around
Yeah, from
6.
6 to 10 for that
Yeah,
opening, you
six,
said?
six, yeah, exactly 6 till 10. You have news at like what time is it now? 6:30. You get non-farm payroll news and other key pieces of news at around 1:30 London time, which is 6:30 your time, which is 8:30 New York time. And there's always some key data that comes out. Then there's always stuff that goes on, and that often makes gold move, makes the stock markets move. So there's always opportunity. It just depends what you're looking to trade. But then saying that, you don't necessarily, if you're day trading, you're looking for an opportunity. That's cool. You can get up at that point and try and find something. If you do something and make some money, then which there are moves, like I say, then you can be done in an hour or two. So no excuse there. If for whatever reason the markets are a bit slow, a bit dead, you may not make something during that period. But then keep an eye on it throughout the day and look at some bigger, wider setups, plays that may develop. Like we looked at gold last Thursday into Friday, and the more we looked at it, the more we thought this is going to go and retest at 1850, and it's going to break down because of the fundamentals. The vaccines are saying that more and more vaccines are coming out to be, reportedly working, and so institutions are going to move their money out from gold. They don't need to hold that as a safe commodity. So you knew it was going to make another drop as they dump a load and cash out and bank their profit. And so stuff like that. So you can just by keeping your eyes and ears open and trading what you see and paying attention to what's happening, you can sort of get ready and mount like some form of attack or some form of play, some business trade plan, I should say. You formulate something and say, well, if it does this, I'll do this. If it does this, I'll do this. So I said last week, I'm done trading by Wednesday morning. I'm done. It's like 7:45 London time. I thought, I'm done. I don't need to do anything else now. I'm done this month. And I said, well, I'm still interested in gold, so I'll keep gold on the table. And if gold does what I think it'll do, that'll be a play. I'll have a go, and it'll be lucrative because I said if it breaks, it'll make a nice move down, right? And it'll give us a decent 700 pip move and then some. So there's money to be made. So I said if that does it, that's it. And so that's what I did. I focused on that, and that was it. I didn't need to do anything else. But in terms of being awake for it and around, well, it didn't move until 2:45 London time, which is 9:45 New York time, 15 minutes after the US Open. So that was 7:45 your time. So that's a perfect time for you.
Yeah, I was just, every time I wake up, even this morning, like the strategy that I've been using lately, I think there's three different trades that I could have got in like 4 or 5 hours ago,
Yeah.
but I mean, whatever.
Yeah, focus on what you can do, and guaranteed there'll be something that you can carve out in terms of create a strategy, a plan, and there's always opportunities, and it's really important that once you make a bit of money, whether it's win or lose. Try and risk 1%. If it's no good, just be prepared to walk away.
Yeah. Hey, I got a bit of a question for you here. I may know the answer already, but so like I haven't been trading for crazy long. I don't want to jump the gun, but there's a fine line between jumping the gun and confidence. If that makes sense. You familiar with that phrase? Like just getting ahead of myself and whatever.
Yeah,
Uh,
yeah.
Basically, what I'm getting at is like, I haven't playing around with any like real significant money. Like I have like $1,000 in my trading account, and I've lost a lot more than that, but now I'm taking it more seriously. But essentially, the question is like, at what point? Because I've been profitable now for a couple of weeks. At what point should I like start trusting that this is a real thing that I can do and actually put some real money into my account? Does that make sense?
Yeah, but
Or do I should
you'll
just chill
know.
out and
Yeah, chill out. You'll know. You'll know because you'll think, okay, you know what? I've been seeing these setups. Often strategies watertight and things are going well, and so okay, we'll start building on that momentum. Yeah, you need to make sure that you have a
okay?
trade plan and you're doing something in terms of a routine every day, and you're kind of being disciplined in terms of sleep and making sure that you get your head down at the same time every day. Get into it's routine, isn't it? Get into some sort of pattern that that you can operate on autopilot. And so for me, then I don't have to necessarily set an alarm at 5 o'clock or so. I tend to start waking up, and it's just automatic, isn't it? Because your body
Yeah.
clock adjusts. So then little things like that. But make sure that you go to bed at a reasonable hour.
Routine's just awesome.
Sorry, mate.
My sleeping routine's just awesome.
Yeah, is that because you haven't got one?
Oh,
Y-
we were talking to him at like 3:30 in the morning his time
Yeah,
yesterday.
yeah. I stayed up last night a little bit until about midnight. I think 12:30. I remember going to bed. It was a late night, but that's because I thought I'm not going to do anything today, and I'm not getting up early. I'll just make sure the kids are okay, but I don't have to be up. I'm going to lay in bed. I think I actually woke and got up at about 7:30ish. So yeah, it wasn't too bad. But I haven't done anything today. I've just kind of
I'd like to maybe
relaxed.
chime in with an answer for D-Rock.
D Rock.
Yeah, and
Yeah, man.
when I knew is when taking a trade didn't cause me any pain or emotion. That's when I knew.
Oh yeah.
Okay, and you mean like taking a loss and it's still like you're seeing
Yeah,
the gain?
whatever I did, I had to be more than comfortable with when I was doing it. If you're taking a trade, even if it's at 0.001 of lot and it hurts you to take that trade, or you think, or you're emotional about it, I
Yeah.
don't know whether you're ready. I would gather that Alex, when he takes a trade and puts 50 loss on, he's very, very comfortable with it.
Try not to think about it and
Yeah.
just say, okay, I need to do what I've been doing over and over and over and over and over and over again, and but that's what we have to do. That's the play. That's
Yeah, I'm
what's.
definitely not there yet then, because even yeah,
You just have to
even I
switch it
know
up a
my
bit. Yeah.
exercises.
Well, you stretch yourself and you stretch yourself and you stretch yourself. You keep inching ever further out of your comfort zone until you get used to it, and then you've moved the boundaries, haven't you? You've stretched yourself, so that's the new norm. And you stretch yourself again. There are exercises that you can do to help do that. Like there were people like Paul McKenna, the hypnotist, and people like that. There are books where they talk about, or you can find extracts from their books and go online, and you can see there's certain techniques. That's the word. There's certain techniques that they discuss and share with you, and so you can find things. Again, this is what I talk about when I say about self-development, self-improvement. This is about your training. It's part of your training. Spend less time putting trades on and more time building a foundation to allow you to take those trades without emotion. Like you know, clearly that's one of those things that just needs to happen. But you do appreciate that as a new trader, there's far too much time spent just staring at charts and doing charting, and not enough time allocated to what is actually 80% of the issue. So they say 80% of trading is psychology, and 20% is actually trading. But yet traders, new traders in particular, put 80% into the trading and only 20% into the psychology. So you need to like acknowledge that, appreciate it, and accept it. And I wrote something today. I just said like acceptance of oneself in understanding what you're capable of is key, not only to your trading success. And what I mean by that is what I've just said. You know, it's about prioritizing. What do you need? You know, and if you don't know what you need, that's where you need to start and say, right, what do I need in order to make myself feel better about placing trades, or what do I need to make myself feel better about seeing an opportunity and being able to put the correct risk on, or it could be anything. And there's a number of questions that you'll need to sort of answer. And so, you know, 3 months later, you've answered them, or 6 months later, depending on
Right now,
what,
my
you know.
problem is not enough risk, actually. You know, like I just, like my lot sizes are way small, and like I've
Well,
bought
what's
positions
small though? Like what? 0.5%,
the
or
smallest possible. Oh, like risk wise,
you need to talk in percentage, and
quarter percent,
yeah, you
possibly.
put a lot of emphasis on the percentage, and that will help you, because that's okay though. Doing 0.25%, you know, if something's going really well and you feel good about this trade and it's working and it fits your criteria, then at that point, that's when you can actually stretch yourself and say, I've got,
Okay.
you know, I've got a
Okay.
0.25% on. I want to put another. Yeah,
Thinking
that's
like
fine.
maybe a 0.5% to three
Yeah,
quarters of
well,
1%
yeah. You can
going in
put
is
another quarter on, exactly. Add to the position, scale in. That's what Rob was saying. That's what he does at certain key areas. He uses those fib levels and he'll scale in. So he'll put a bit on there, and then he'll put a bit more on there if it goes up a bit more, and then at the height, at the level that he really wants to be at, or be in, at the level he wants to take the entry in the trade, he'll put the bulk of his position on there. So he reserved the right to put his full attention and full risk at that level. So as price retraces up, he'll be scaling in and put a bit there, bit there, bit there, and then it gets to that level where you're like, right, this is where I'm going to put my position. And it's like this is what we're talking about here. This is it's really good. Somebody drew this chart, and I said, can I borrow it? And I've taken it and I've made it my own. And
yeah.
can I
I think that one
can
there
I,
I
can
think
I
could be drawn a little cleaner to it. You know, like I know how to use fibs and everything. It just still doesn't really make a whole lot of sense
what this
because I
doesn't
don't think they're drawn in the right spots. And
really.
yeah, man, like it just
I don't know why this thing is this is annoying. This screen sharing uh, bit. It just this okay. Let me just move that. It's really annoying. It doesn't let me move
yeah,
stuff.
like the psychology part is such a
Yeah.
impossible, well, not impossible, but such a interestingly hard thing to get over because I've well documented the last 11 trades that I've taken,
Yeah.
uh, and all 11 of them I have closed them earlier than my initial plan was to.
Okay.
All 11 of them I closed in profit,
Yeah.
and all 11 of them would have hit my final target if I had just left them.
Yeah.
And I'm like, what the hell is wrong with me? You know? But yet again, I just keep doing the same thing. I'm looking at these pullbacks, significant or not, or whatever.
Yeah.
And you know what? I'm happy with this profit. Close it when I could have been making more or whatever.
Yeah, that's okay. So that's just lack of experience and uncertainty. So you're not sure still. You're not sure if the market's actually going to do what you think it's going to do. You're not trusting the process because you haven't done it for long enough to have that confidence and belief system in place. It's not quite refined. That's just comes with a bit more experience. You know, that's okay. There's nothing to worry about in that respect. I think that's it. I think you know we are going to be putting a lot of pressure on ourselves, be quite demanding of ourselves, and ask a lot from ourselves and say, okay, why don't we do this and why don't we do that? And so when you don't do what you think you'd like to do, then there you go. That's an area for you to focus on, and look to improve on. Yeah, that could be your first area. Right, let's put this like that. There we go. Because I'm struggling here to. It doesn't allow me to. Okay, there we go. I wanted to. Oh, this chart. So you said. Let me find it. Where is it? So on Telegram, let me pull this up. Let's explain it. You weren't clear on this.
Yeah, like there's, like I understand what he was trying to do for sure, but like I just think it could have been drawn a lot more precise. Like where's the 0? Where's the 100 on the fib? Where were these lines drawn to be exact?
Okay. So yeah. Okay. So I think sometimes people need to appreciate that they need to do it from try and see through the eyes of a complete beginner.
Like
And
I understand the strategy
yeah.
myself, but that picture confused me. Like I already understood the strategy. And I was
Okay.
like, what?
Okay.
I can't even imagine where he's drawing this from.
I'll talk you through
Because
it
like you
and
said, there's no 0 or 100.
yeah. Okay. Let me find the write up. There we go. Content. Go to here. Strategies. And let's pull this up. This is quite straightforward because I think it's quite straightforward, but it might not be for you. But let me explain it and see how we get on with the explanation. So what we have here is he's highlighted the key fib levels which are relevant, 38 to 50 to 61.8 and the 76.4. And he said, okay, this market here is in a downtrend. So if we're going down, we have the first leg down, then we have a pullback, and it might pull back to say the 38.2, and then it continues down. He was asking the question, because he wasn't sure, he was asking the question, where do I get in? When do I get in and make this 764 strategy work? Which 76.4 level do I use? Do I use it on this first impulsive move down? There's a 764. So do I wait for price to then retrace all the way up to there, to that 76.4, before I short? Or do I wait for the first pullback on the first little range before I before I put the sell on? So he was talking about this downtrend. So we're in a downtrend, and this is price action because that's how price moves, isn't it? It goes down a bit, pulls back a bit, goes down a bit, and he says I've identified a nice sell-off here. Now I'm waiting to jump in to short this move on the retrace. But which retracement do I wait for? Do I wait for the first one, or do I wait for it to go into the second one? And I was like, well, you can do both. But obviously the first one, because it's the first one, that's the first one you're going to take.
Yeah.
Because that's the first major pullback. So we're clearly in a downtrend. And we've had the first pullback of this range is to 76.4. So I would look to get in there. Because this may just continue to go down. So it goes down, pulls back here, and then it will continue back down to the low. So it's not a case of the 100% is here and the 0% is here. So there's a 0, there's a 100. That's how you would plot it. And that, I think, is what he's done there. And here again, 100% would be here, and the 0% is here. He just didn't put them on because he didn't want to clog up this screen, I guess. So he's kept it really simple because the 0 and 100,
Right.
they're going to be the 0 and 100 on any. When you plot your fibs, it should be goes without saying that everyone knows that you plot it on the high and the low. So he didn't want to state the obvious and say, well, the 100%'s at the high and the 0%'s at the low. So that's why he hasn't put them on there. So the scenario was the focus he was asking. The reason he did that is his emphasis is here. He wants to know which 76.4. When do I get in and short this? And I said to him, this one or this one, both. You can do both. If it goes here, you'll get a reaction. And if you get a reaction,
Full retracement happens. You can encompass the entire.
yeah. I mean, yeah, exactly. But this one, if it breaks here and breaks this previous high, this pullback, and it breaks this could be a change in sentiment. This could be a change. You got to look out for that because that could be a change in direction. That could be okay. We are not bearish anymore. We're actually bullish because we've taken out the previous swing high. We've taken this structure out.
Buying to the 764.
Yes, so I said that's why we need to establish there are rules, and the rules are that if the market is bearish, This is no problem. The pullbacks is what you sell back down into. That's what we did with gold. It was bearish. We sold into the pullback. So we wait for the pullback just so we can get a decent entry and take it down, because you don't want to sell it down here, because then it goes up and you're sitting there in a loss, and it can be quite frustrating, and it can stress you out, and the loss can get quite big to a point where you just end up taking a needless loss, and it's horrible, and then it drops in your favour. So entry is really important, and this addresses that. The other one is, if the market was bullish, this is a bullish market, so we've had the pullback from the 100%, we've had the pullback, and this is starting point. So now, assume that these lines are going to come all the way across here, and we're down here somewhere with price, and we start seeing this move up, and we think, actually, this looks like the pullback is done, and we're going to go long. So our first target is going to be at the 76.4 to the 764, and as a safe entry, there's two rules to this. You can either take a long, be aggressive, and try and call the bottom and get in long here, or wait for it to retrace to the 38.2, see how it reacts at this level, and then if it breaks and continues to go up to test the 50, 61.8, and then 76, you can put your stop loss just below that 38, somewhere down here below that buy, where it says buy, just put your stop below. So there doesn't need to be a big risk, and your entry can be somewhere like here and ride this up. And then if it doesn't break that, or it acknowledges that this is just going to be a range bound market, it may be a case of you taking your profit at T1. If it doesn't want to continue long, it might just drop all the way back down. Could be an opportunity to sell it. So yeah, it's very flexible in that respect. There's certain criteria you need to establish, certain rules. So the rules are, buy the dip if the market is bullish, and 3 possible entries. Can you see my screen, or is it paused?
Yeah, we can see it.
Yeah, you can see it.
Your screen is paused, it says. Why is it saying that? Resume share. This is very strange. Okay. No idea what it's doing all of that. But anyway, there you go. So yeah, I thought it was a nice, simple illustration. Put the emphasis on what you can see in that illustration. Don't worry about what's been left off. If it's been left off, it's been left off for a reason. It's not relevant. Like the 0% and 100%. Just know that the 0% is going to be at the bottom, or at the start of wherever you're looking for this to retrace from. The 100% is where it's going, and so the 100% is always going to be above that 76.4. So you can see which way he's got these charts, or which way he's got the setup. I guess it's let me see if I can share the rules. See if you can apply it to something real world. So pound yen was a good one. Let's go to pound yen quickly. So pound yen, you can see that this is a 4-hour chart. Let's zoom out a little bit, and you can see that we were buying in a bull trend and a bullish bias move. We were buying the dip. So you see where the dip is, and then you see it going up, and you're saying, okay, you can see where the 38.2 is. The 38.2 does often, you will notice, that 38.2 tends to be where the previous bit of price action was, like a previous structure, a bit of faffing about here with this price, and then it broke. So then at this point, you're like, okay, let's buy here. Let's take a long at, say, 138.39. In terms of added confluences, we could say pound yen likes the 30 number. So let's buy in the 30s here. Let's put our stop slightly below, and then it breaks. And let's ride it up to our first T1 is going to be 139.50 to 60, which is what I shared, and I posted that, and I made that clear this week as well. And I don't know, does anyone remember us talking about pound yen? Anyone remember this trade? We were talking about this going long as a T1 to the first 76.4. And you can see how price reacted there. It got there, it touched it, nice, and then it fell off. It came, tested it several times. This is a 4-hour chart, so quite a few candles of rejection at that level. So
that was one of my trades. That's actually before I even knew about you. So I'm super proud to say I found that one as well as you.
So that's good then. Yeah,
Yeah.
that's
I actually just closed it like midday yesterday. I'm just trying to
okay.
find the markup here. But I got like something like 160 pips out of a move. Like I had it for a while.
Did you? Okay.
Yeah.
That's really good. That's solid. That's really solid. So yeah, we've had rejection. It's just range bound because we're during this festive season now. It's quite interesting though. Intraday traders will still find opportunities to trade this range. It's quite a nice range. Pound yen likes the 30 number. It likes the 80 number. It went up to 80, fell over.
Like
Went up to 80, fell over.
I was in at exactly 138.
Okay. Down here.
And then I got out at 139.6.
139.60 up here. You got out at the so you rode that entire move, which was a perfect trade.
Yeah, I know that's like the best trade I've ever done in my life.
That's okay. Did you know what you were doing with it? I mean, did you have any
I did, man. I got a full markup and everything. I'm trading like published. It was perfect.
Oh, share it, chuck it over. That'd be really good to see. It'd be good to see. You don't need to explain it or put any too much dialogue with it. Just
I got a little bit of an explanation. Where
okay.
should I share that to? Discord.
Put it in. Yeah, put it in the Discord, and I'll chuck it out in the screen on the screen. Or if you want to pull it up and you can share your screen.
How to actually share the idea version rather than screenshot. Share.
It
Okay.
yeah. Yeah. It's really good though. I mean, it's funny how I did the analysis on this, and we consolidated at this key area, a good demand zone, and it held. It dipped down, did like a liquidity grab, rejected, came into previous structure, and then it starts moving up. So it moved up, and then we have our first sort of big push. 4 hours, so it doesn't really do it justice. Let's see if we can drill down to an hour, so you can start actually visually seeing price action and how it moves up, and pound yen, doing a whole U shape going up to to retrace, and you see it stuttered and stalled around that 76.4. It's not an exact science, but it's a good reference point. It's a good area to get out, or if you were shorting it to get in. So there are several trades that you could do off that, and that's what that is highlighting as well, because that's basically saying, well, look, it's gone up there, and it's retraced to the 76.4, and it's come off that, or this one here even. This one here is similar. It's gone up, hit the 7.6, and then it's come off it. But in terms of that second one, this is what this one was. So we had this price action, consolidation, then it stabbed down and rejected, liquidity grab, and then continued long. Bullish bias, but buying the dip. So similar price action. We're going along, we stabbed down, next leg down, rejected, starts going up. It's not a clean and exact science where you want to see, one line where it's gone down and then up. No, it's doing a lot of squiggliness. So the smaller the time frame, the more stressful you're going to be with all of this price action, because you're going to be weathering every single movement, and you'll be like, oh, and it can be quite distracting. Can you draw a fib on the pound CAD, please? The trend is bullish. It's due to bounce back up very soon.
Alex, have you got two fibs going on the pound yen?
Yeah, so the fibs are for this range, and then I have the fibs for the bigger picture, because we always do the top-down analysis. So we do the, looking at the week. Let me go to the weekly. I'll go to the weekly. There's the week. Let's try and bring this and focus on that. Gets a bit messy, but that's what we're looking at. We shared this yesterday, and we were talking about how we've come to this supply zone here, and it's also 76.4, and that's where it swung up from. Someone was asking me, where do you put your highs and lows? Where do we put the fibs on this range? And I said, well, we take the last swing high, which was this one, because it's taken out that one, it's taken out all of that, but then it didn't take out this bit, did it? It just rejected. So we just look at that, investigate a little bit further. We're like investigators. Yeah, this session's been recorded, and yeah, we'll have a look. We'll have a look at the pound CAD in a sec. Yeah, no problem at all. But yeah, no, look. So we had this whole come up. We go and have a look, drill down, plot some fibs on this bigger range, and we identify 76.4 previous structure, supply zone, multiple confluences. That's what you need. The more the better, really, and that helps, doesn't it? Increase the probability. So that fell over, which was nice. It was a good place to see it. Find some resistance. Any questions on this? This is good for swing trading. This is good always to know the bigger picture. So we were down, we were bearish. Look, I put a trend line here as well on this bigger picture. This is a weekly chart. Any questions? Does this make sense when you look at it? Do you sort of see what I say? Do you guys see the 76.4, how it's reacted, price has reacted off here? And we left this wick so people could have thought, okay, are we going to go up? But it just seems to be exhaustion. It went into a wall. I think I quoted yesterday like the Dodgems at the fairground, the bumper cars. It hit it and bounced off it. It just went boink and dropped, hit that wall of resistance. So once it done that, I didn't have this trend line on there, but as soon as it did that and dropped like that, I put this trend line on. Oh, it was so easy to see, because I think prior to this trend line, see, this is why you update things every now and then, every so often. But I think my trend line was like that before, and it probably fits in quite nicely with those last swing highs. So you imagine that stuff hasn't happened yet, that this move hasn't happened. So a play would have been here. Now you start focusing on the. You'd focus on that price action, wouldn't you? You'd focus on, is this going to break up and break out of that double top? Something like that, right? Mm-hmm. So you can see price action now. Again, I've just, it makes you look at it again in a different light. And you see, so this was the play back in June, summertime. Move up, hit the trend line, hit, which one's that? That's 61.8. Perfect. Really, really clean. Likes that 38. It likes the 80 number, 38.80. So it's stabbed above to 139. Is that 139? 139.80. Yeah, you can sort of guesstimate as well. 140, big round number. Getting up here, we've got a trend line. However you draw that roughly, and then you sort of see price just ran out of steam and then just fell over. So when you start seeing this sort of moving, okay, we're bearish at the moment, we'll take it down. And then I guarantee if you was to drill down again and just focus on that price action, which I would have no doubt done, I would have been looking at this move, this move here. I would have plotted some fibs. Straight away I knew just by looking at it now that this had retraced to the 76.4. Look, it's come down, hit 76.4, and has left a nice, what did we call this candle? It's a doji, isn't it? Is it? I forget the terminology. It's one of, morning, morning star, Don't quote me on the technicals. I'm very bad at naming them and labeling them. I've got the cheat sheets. I've got the sheets that give you the names. But when you come from different trading firms and different ways of trading. Yeah, don't never really felt the need to label it, or yeah, I'm just terrible at remembering it anyway. I just know that okay, that's bullish for me, and it's hitting my 764, and it's done a really nice pullback. So we've had the first pump, hit some resistance, hit a fib here, dropped off to the 61.8, and we're looking for this U shape. So there's a play. There's 764 strategy there. By that, there was a decent strategy to short this off here, although I wouldn't have been too clear on maybe entering this. Maybe would have found an entry drilling down lower, and so then yeah, you see it move along, and then let's go along a little bit, and let's see what it does. So you see it break previous structure. There's a bit of a supply zone there. So it seems to be bouncing off that, and yeah, various levels of support, broke the trend line. Yeah, so you just play with what you see, trade what you see, and use what confluences it's giving you. And some of it you might not be able to recognise or make sense of or question or whatever. But that's why you have these groups that you are a part of. Chuck a chart in there, So what do you guys think about this? What do you think it's going to do next? I'm thinking it might do this. Don't be scared to share. And some people might be a bit too reluctant because they think, oh, I don't really know too much, or I'm still learning. But yeah, don't be afraid, because nobody's going to, generally speaking, no one. You don't care what other people think anyway. You're not here to offend, and I don't think you're going to be offended. No one's going to have a go because everyone's in the same boat. So you might be pleasantly surprised. And that way you're doing that whole Pearson's law concept where you're monitoring your performance, but then you're reporting it back. And so by doing that, you feel like you're more accountable, and so you're making sure that if you do share a chart, you're going to polish it up a bit. You're going to put fibs on there, or whatever you're going to do. You're going to make that chart look amazing because you want to wow people, right? You want people to take you seriously. So that's actually a positive. Don't be scared. Don't scare yourself into doing that. Do it, and knowing that you're going to be stretching yourself a little bit out of your comfort zone, and knowing that you're going to sort of expose your weaknesses, maybe your lack of knowledge or something. But then somebody will come along and offer some support and clarity, or say what you may have already known deep down, and you'll be like, oh yeah, there you go, cool. And you're just like, wow, it's a stepping stone, and you've just made progress. And so yeah, understand what you're doing and how you're doing it. There's processes for everything. But inaction is sometimes a good thing as well. But in this case, when you're doing analysis and you're trying to analyse stuff, I don't think I think inaction on that front is not good. It's not productive. If you don't share, if you don't talk about things, if you don't do analysis, how are you expected to really learn? You can watch me put these charts up, but it's far better to do it yourself. Teach someone to fish, etc. It's better, isn't it?
That's why the replay rating is really, really good.
Yeah, I can imagine it is.
Yeah, I'll like I shared that GJ one I marked up.
Yeah.
Like 5 days ago or whatever.
Yeah.
But I was trying to share the actual idea itself rather than just a screenshot. I literally couldn't figure out how to share the idea.
I think everybody, as part of their homework, should be doing analysis on a chart. Should have a chart to share, and being part of these groups, because of we're more connected than ever before in this world, and you have the internet. Being part of it and being able to do this and utilise these forums and these groups by sharing charts and getting feedback, getting your work marked, just like submitting homework to the teacher, and getting appraisal for it. And yeah, don't worry about it. It's just, don't worry about it if it's right or wrong. If you do that and something's not right, what's going to happen? Actually, that you might want to look at that area that needs tweaking. All right, cool. That took like 10 seconds. Okay, great. You've just progressed like massively, which might make you a shit ton of money, and it was just so easy to do. Or you could just sit there, hide behind your screens and do nothing, and maybe take 6 years to get to where you want to be instead of 6 months. It's your choice. So yeah, I think trading's brilliant in that respect. It brings everybody together. Nobody's competing with anyone else. No one's better than anyone else. So, with that said, you've no excuse really if you're not learning or you feel like you're not making progress in a certain area. I've even said, I'm here, I'm off, instead of just going to lounge around, do nothing, take the day off. I'm here giving my time for free instead of charging, thousands in consultancy fees and all the rest of it like you could do quite easily with certain companies. And I don't know, it's just, I'm surprised people don't bite my hand off to kind of make the most of it. And so, yeah, share stuff. Telegram's the best forum for me.
I think a lot of people would probably be like kind of scared to approach you to talk to you. Like,
Nah.
What is why would this trader want to talk to me when I have a $230 account or whatever?
Oh, yeah, but that's okay.
I'm gonna be asking him the most retarded questions.
Yeah, but we're talking about something. We're talking about stuff that we're talking about a hobby. We're talking about something that we're all interested in, we're all passionate about. And I get like there's like this whole yeah. I mean, you see you see people that are famous and you see them in the street and you'd be intimidated to talk to them, or that's a natural reaction with just us being human, isn't it? But I think this is work related, and I don't think that has anything to do with whether anyone's made more money or not. We all die at the end of the day, and we're all the same, and we all do the same things, like literally all do the same things. We all have human bodily functions in the same way. Everything is the same. It's just yeah, you have to kind of just think like that and just think real world. And yeah, I'm approachable. I'm not too much up my own arse, that's for sure. And yeah, I never have been really. I've always been very social. It's nice to talk with people. Like I say, that's how I've made friends all around the world. And I've been travelling, and then you go and meet up with traders, and we did that when we were in Sydney. We met up with loads of traders, and when we were in America, and yeah, a couple of people in Canada that we met up with in Toronto. And it was really good fun. It was just cool to hang out and do stuff. And yeah, so yeah, there you go. Let's drill down a little bit more. Let's see where this is. I'm looking for pound yen. So we're actually making lower highs here. So this high is lower than these lot. This high here over here. So far we've struggled to go up. This is a weekly candle. So last week we went and did that. Let's focus on this bit. Drill down and have a look. So last week we had a bearish candle, but pound is still bullish overall. It's still trying to go up, but it is struggling a little bit. And we are, it's a Thanksgiving week, so we knew it was going to be quite slow and steady. We're still waiting for Brexit as well, so there's that aspect that's a bit likely to impact. So you've got to look at fundamentals as well. But otherwise, we just say bullish or bearish. It's bullish. Are you interested in taking some shorts on this? Well, if you are, I can appreciate, allow it to finish and properly fail at these levels like it did 2 weeks ago when it went up to that 76.4 of this range at 140.30 and then sold off. And if we drill down to a daily, we'll see that in clear high definition. it went up and we had our first daily reversal candle. And like I said, I shorted that. I got in there because look at this big old move up with the vaccine and whatever else was going on with yen weakness, and then I think it reversed, and yeah, it was nice really, and then it sort of stalled and found some support, and yeah, good. So we went to complete the N shape, but the U shape. But my first target's at 764. I'm not looking to take it all the way to the 100%. Look at that. It didn't even get to the 100%. It almost got to the 100. It faked a lot of people out, stuttered and stalled, lack of volume. And the amount of people that are trying to buy, retail traders, trying to go long. They're trying to go long at the top here. Instead of going long down here, they're going long up here. When you try and take a long up here and you think to yourself, should I be going long? Steve-O, you're very loud. I don't know what's going on in your house, or shuffling. It's really loud.
Yeah, super loud.
Yeah, I don't know. Anyway, yeah, but there you go. So you asked that question: should you go long here? Where was the best place to get in for a long? Anywhere below, really. Ideal entry down here. Great if you're aggressive. At the break of the 38.2, that would have been ideal for me to go long there to take it up to the 764, and you can see that on like a 1 hour time frame, and you can see the price action. It's quite nice, really. So there's some good plays, and if you see stuff or you get wind of stuff or you think, oh, actually, what's going on with this? This looks promising. Immediately think to yourself, okay, let's draw up a trade plan. I'm not sure how to do this. So let's think about where my entry would be. Let's think, where would I have to put my stop loss? My entry somewhere around here, 138.40. My stop loss would therefore have to be 137.40 down here, or would it have to be somewhere like below this immediate price action? Somewhere like here, you can see.
I got a little bit of a question for you.
Yeah.
On something you said. So you had said the phrase, my ideal entry would have been once it passed 38.2 or whatever on this specific scenario with GJ.
Yeah, yeah.
Like that would have been around where you start to buy.
Well, I start looking at it here and saying, okay, we're in this bearish move on an intraday basis. We've kind of tried to go down, but it's failed. So we're saying, okay, it's had a pump up here, and it's giving it back, but it hasn't broken. So okay, this is just whipsawing people, sucking in a few buyers, a few sellers. It's messing about at the moment. Okay, cool. And now we're slowly making gains. We're going up here. I think, okay, cool. This is coming up back to retest the structure. We've rejected the low here. We've got a double bottom. Again, higher time frame. What's the higher time frames telling us? Keep having a look at those. Where we're looking at this price action at the moment. The trend line's holding. It's all a little bit jaggedy, bit messy. Yeah, not too sure. That daily's not really telling me anything. It's just saying it's still holding support and it's bullish. Actually, what am I even looking at the right area? I should be looking at that there. That's the part I'm interested in, isn't it? There. So let's look at that. That's dropped down, and we've got an inside candle, bullish candle, inside candle. Okay, what day was that? That was the 20th. So what day was the 20th? I can't remember, but yeah, 6 days ago. So looking at that first bullish candle. Okay, so yeah, Friday.
Is that what they call an order of what else? Right there?
Yeah, I think so. Yeah, supply and demand. So it's a demand area. Well, this is acting as both, isn't it? I mean, coming down to it, you can see reaction there, and then it confirmed and fell over. You can see price came back up to test that area and fell over. You can see that we've shot through but come back down to rest on it, because that was maybe an impulsive move with the news. It's never exact, perfect, but you know from historical data from price action that it's an area of interest here, particularly when it does that. Yeah.
Pretty specific question for you. Like if you're looking at the daily chart, which you are, and you zoom way in
Yeah.
on that small recent dip there,
Yeah.
like just under 138,
Yeah.
bottom of your little purple box there. So there's that one candle with like a really long wick to the downside, and the following candle is a nice daily bullish candle, and that's the close of that candle is where I entered the trade. It was like 137.93 or something, right?
Yeah, it's a good confirmation as well on a daily candle. It's a nice daily confirmation, isn't it?
So my question was, like, even though that trade worked out awesome, you know, wouldn't it have been better maybe to enter like at the close of the previous day at slightly more risk, right? Because there's no actual candle confirmation, but your stop loss would have been way smaller. Does that make sense what I'm trying
No,
to
yeah, of course, yeah. Again, that's personality traits and what sort of trader are you? Are you quite aggressive in that respect, or would you prefer to to be a bit safer and look for a few more confluences and a few more confirmations. So like identify that we have all this price structure, like this price action, and we've identified previous structure, and it's an area of interest, and you can see price has consolidated. And so would you not want to maybe just see some sort of candle like this, say, okay, look, now it's rejected, okay, that's one confluence, but this day has actually gone up and it's all bullish now. Great. This is using the daily, so the daily, look, the next day it all confirms, and it was using the fib as well, and the structure and everything. There was plenty of support in various different shapes and sizes and forms that we'd identified and established. So that's why this price then, it recognised it.
Reason I entered too is
Yeah.
like that one candle is technically more bullish than like the previous 5 days.
Yeah, so
Like,
it's
just
yeah,
shot up
that's right. Yeah,
fast.
yeah. So it's kind of nice, really. So this is all happening in slow motion. It's daily, so maybe you'd have to then drill down. Certainly from the daily point of view, it's a powerful confirmation candle, and it told us that we should be going long and that we're bullish, and that the bears, it's been rejected down here. So straight away, I've got my fibs on there, and I'm like, okay, let's identify that low. Let's acknowledge this low. This is a low now of interest. So this low point is my starting point. That's my zero. That's my zero line. That's my zero fib. There we go. That's what we're looking at. We're not interested in anything else so much now. We're interested in what's about to develop here and unfold. And immediately I know from experience that I'll put my fibs on here, and I'll be looking. Where's that 764? Oh yeah, it's up there, is it? Okay, that's cool. Yeah, that's nice. Okay, what other sort of elements of what else have I got in the way? What resistance levels have I got? Is there anything in the way? Is it cleared a path? It's kind of like done that pinball machine game where you pull back the spring, you coal back and get ready to launch that barbarian. It's like that. It's like pull back, and it went bang. So it's done the pullback. It's confirmed that we're not bearish. Confirmed that we're not going down. We've confirmed that we've filled some of this void, the imbalance that people like to refer to. This spike up, bit of an imbalance there. I guarantee if you plot some fibs on this move down, so take it from, say, I don't know, this impulsive drive up, which was, I think, news related. I believe it was the news from, let's have a look. It was the news on Monday, the vaccine. It helped. It caused the yen weakness. So do that, go like that, put some fibs on. First impulsive drive up. Measure the pullback. Oh, look at that. Where's it gone? No, 764. Okay, interesting. It's just one of those things. It's a phenomenon. And you'll see it time and time and time again. So you measure this price action, you see the pullback, you want to know, is that pullback finished? Is it to the end? Coming down here, I would have already been thinking to myself, if it, it's going to go down. When this price action was here, I'm thinking, okay, this has still got potential to get to the 76.4. There's still petrol left in the tank to the downside. So we're not bullish yet. We're still focusing on bearish price action. We're still focusing on shorting this. I know people shorted this from 138. And they took it down. It was a nice 80 pip move or so. A decent range, decent move. That's nice. Right, it's done its business to the 76.4. That's all done and dusted. It didn't touch it exactly, but it's difficult to know exactly where to put the fib in terms of the high and low here. But so what we'll say is, okay, let's look at, people will send me charts and say, I'm not sure where to put the fib. Where's the starting point on this? Or where's the retracement on this in this case? I said, look at the smaller time frames and look at where the price took off from. At what point did it make a move? So that's when you drill down to your smaller time frames, like an hour or 15 minute, and just have a look and just try and find where you think it's going to be, and you might surprise yourself that it's not just random price action, that it does actually move to key areas, because I think people are driving this market, right, as opposed to machines and algorithms. I think there's still a lot of human intervention, a lot of human traders in the banks that are manipulating this. And manipulating is the wrong word. They're trading. They're not manipulating anything. They're just trading. They're taking the trades that you only dream of taking, and when you turn those dreams into reality, then it's cool. That's it. Sorry, what was you going to ask?
I was gonna ask if you ever use like the psychological levels, like quarter points, like 130, 140 on GJ, for example.
Yeah,
Is that within is that a good
yeah,
framework for
they're big round numbers, aren't they? Fundamental numbers, where yeah, they're numbers of interest, of course. Psychological, yeah,
yeah,
140,
like if you look at the daily on GJ, that was another confluence that I kind of used for that specific trade whenever I'm looking for like long term stuff.
Yeah.
And so if you stretch your fib out how you had it or whatever on the daily, and
Well,
that
look
was
here.
another.
Yeah, you're right. No, I see where you were talking about getting in at 138. It was just a nice trade. It was a good trade to be in. There were so many things that you identified. That's just another confluence. Another confluence means reason. Another, or excuse, however you want to word it. Another reason to justify taking that trade. You're looking for as many confluences, as many excuses to take that trade as you can. Here is a good example. 124 with the COVID sell-off, yen strength. It went to 124.
Yeah, I
Give
know.
or take, pretty much bang on. It's not coincidence, is it? That's banks are driving price down to an exact level and moving moving things to exact numbers. It's quite good when it does that. It's quite powerful. I
Yeah,
like
at
it. I
the
like
end
it.
of that main daily push, it wicked exactly on the 140, which I was taught is called a major quarter point. And
Um,
yeah,
yeah, no, it is. It's sorry. I just see some. Yeah, no. I think you're right with that. I think you was good with that. I'm just seeing some questions as well. I'll answer these questions as well.
sure.
Let's answer some questions. So, so yeah, 138. You can see previous structure. There was so much to see. I mean, there was so much goodness about this trade and this setup and the whole like completely U-shaped to go back up and knowing where to take it up to and where to get out. So if you got an out at 139.60, you've done well because you could have held it for another 20 pips or so. But right now it's dropping
Yeah,
back. It dropped back yesterday as well. It did this. It went down and then back up and then it's gone down. It's just faffing about because of the time of year. It's a holiday week. Again, you have to take into account the fundamentals. This is the fundamentals being holidays. If the banks are off today and people are sat at home with their families eating whatever it is they're eating, turkey, etc., then you have no business taking trades today, full stop. If you are, it's like, okay, you're doing whatever. But realistically, take a day off or do a bit of back testing. That's what I said yesterday when we were doing the analysis. We did some live trades on gold, but good 80+% of what we were doing was analysis and doing this and talking through certain things and personal development and psychology, and then a trade set up on gold, and we took it and we got in zero drawdown, made some money, job done. That was over and done with in like 20 minutes or whatever, and it was great. And so trading is that's what trading should be. If you're doing 80% trading and 20% other bits like psychology, development, sorting out your trade plan, brushing up on your strategy, then you've got your priorities wrong. If we say that 80% of this business, or it could even be 90% of the business is, or even 100% of it almost is psychology, is about you, is about making sure that you are mentally equipped to trade, etc. Whatever it takes, whether you've got watertight trade plan, strategy, etc. If that accounts for the largest portion of what this business is, then why is it you're giving 80% or 90% to putting trades on? I've got to take a trade. I've got to take a trade. I've got to join a signal service. I want signals, and it's like, well, then of course your priorities are, you've got them the wrong way round, haven't you? It's mixed. It's messed up. And so if people are sat here listening to these sessions and they're not really, and they're very impatient and they come in for 10 minutes, they listen and then they sign off because they think, oh, there's no signals or whatever, then that's okay. They're not going to get far, or they're maybe going to learn some hard truths about the business. So
yeah,
80% of what you do as a rough percentage guide should be about personal development, should be about analysing the market, should be about sitting on your hands and looking at stuff that's going on, making sure your strategy is working, making sure you've got your trade plan right, you're exercising, you're eating the right food, you're enjoying life, going out, golfing like Martin does, stuff like that. And then you come in and do 20%, taking some trades, making your money because you've done all the work behind the scenes to get to that point. And so yeah, I mean, if you have a busy, you said tips on how to balance trading around a work schedule. So there are key times to trade. It's about being more specific and saying, okay, I work these hours and I live in this country, so this is my time zone. So if you want to chuck that over to me in the Telegram, then we can just work out a rough trade plan, because the idea is to come in and trade at a certain time and just trade for a few hours and then be done. And that's great. That's what you want. You want that work-life balance, or you want to kind of fit this. You want to fit trading in around your life, not fit your life around trading. Again, that's the other way round. So there's nothing wrong with asking that. That's not bad. 8 till 2:30. So you can work now. 2:30 is the US Open. So that's when the US stock market's open. Like now, they're going to open. You might see some movement. Then again, you may not see too much because it's a US bank holiday, isn't it? Thanksgiving. But generally, it might be a good time. So from 2:30 to say 5 o'clock, that is the start of the US, and we have the overlap with UK and Europe finishing at 4:30 London time. The FTSE 100, the UK stock market, closes at 4:30. Obviously, it still moves out of hours movement and all the rest of it, but the cash side of it closes. So, people buying stocks and shares, they can't buy any stocks or shares after 4:30 because the stock market, the stock exchange is shut. How to understand news? Well, the fundamentals is not to understand, like when news comes out and the figures are like above certain amount or below a certain amount. So you could take the flash services PMI, which all countries release. So the UK and the European ones tend to do it on the same day. They stagnate from like 8 o'clock London time right through to 9 o'clock London time. You have the French, then you have the German. I think French at 8:15, German 8:30. Then you have the European at 9, and then 9:30 the UK. And those PMI numbers can sometimes help see the German DAX go up or down, bullish or bearish, and maybe euro-related pairs move as well. And the benchmark number on that is 50. So just if you want to look at news and understand what news is coming out, you go on Forex Factory and you look at what news is coming out, high impact. You look at it every month, you start to get to know roughly what benchmark figures. Some of them, the numbers don't really change, or there is a number of interest where if it's above that, then it is bullish, or below that is bearish. So that can give you an idea. But when the news is forecast to come out at 50 and expected, so the numbers are released, the data comes out and it is 50, or it's 50.2 or something like that, then it is as expected. So when you hear people say the news is factored in already, what they mean is the numbers are the same. So people are speculating all the time. The banks are making speculation at the moment with like the pound. Well, they have been taking long on the pound, like been bullish on the pound, because they're fast approaching getting Brexit sorted out. And so it's been bullish. And so we've been bullish on that forecast and that speculation. Now, if the news was to come out and suddenly change, so something that's changed for the pound since yesterday was the Chancellor, the guy that's in charge of the budgets, like the Fed in the US, the guy that's drawing up all the numbers and saying this is how much we've borrowed, this is the state of our economy, this is what's what. He's made some changes that are negatively going to impact the pound, and he's also said about borrowing to help continue to maintain infrastructure, which is going to weaken our currency as well, because he's going to be borrowing, and so stuff like that. So you can just common sense. A lot of it's common sense. It's always a lot of it is common sense. So if you can kind of get a rough idea of the fundamentals like that, that's all you need. You don't need to be an analyst. You don't have to have a degree. You don't have to work for a bank. You don't need to. You don't need to do anything beyond that. You don't need to kind of then try and think, oh, the numbers come out 49, but they forecast 50. Why is the markets rallying? Why are they rallying? And like you start asking stupid questions like that. You don't need to put yourself under that scrutiny. Don't worry about it. Just get the gist of what's going on. You'll know when something's amiss or something's not as it should be. If the number's 50 and it comes out 30, then you know there's an issue there. And so you're bound to see some form of reaction. With the US economy, if the numbers come out really, really bad, like the first Friday of every month is non-farm payroll, if those numbers are really bad, you'll see a reaction. And you'll see a reaction on the stock markets, you'll see a reaction on gold. And in terms of being able to read what's going on, well, it will be apparent because you'll see it on your charts and you'll see it suddenly sell off or start to rally. And so there may be an opportunity to jump on that move and make some money. But make sure that before the news, you know that the news is about to happen. Make sure you've got your charts, you've got it all charted up. All your support and resistance is where you think it should be. Have an idea where you think you'd like to see this go, where you'd like to get in to take the trade. That's part of your trade plan and your strategy, which go hand in hand, because you're basically saying, right, I want to do this. If it does this, if it does A, B, C, then I'm going to do X, Y, and Z. And that's it. Simple as that. And you might think, well, where do I start? Well, have a go. Try. You'd be surprised at how much you actually know and can get away with. And then it's just a case of fine tweaking that and improving upon it. But you need a plan. You need a strategy. You can't not have a plan or strategy, and you can't not. You can't just jump in. The problem with understanding the news is people will just sit there, they wait for the news to come out, then it'll make a move, and then they'll just jump on whatever they see happen and take a punt. There's no real plan. They haven't really got a target. They haven't got a stop loss. Most likely, if they have a stop loss, they'll put it in after. Somebody asked the question the other day, where should I put my stop loss? I'm in this trade, and it's going against me. Where should I put the stop loss? It's like, yeah, I don't know, mate. Put it in your head. Try and header it when it comes your way, that'll stop it. Or if your head's hard enough to take that, you know what I mean? I don't know. It's a stupid question, but people will ask those questions. Like I say, don't be afraid to ask questions. I don't mean that. I mean like put some charts up and do some analysis and share that analysis. Don't be scared to share it. People will help you. They're very supportive in these different groups. Alternatively, if you can't, if you're too scared to send it to me, send it to Martin. He loves this sort of stuff. While he's golfing, he'll look at a chart on his phone. He'll ping you a thumbs up or a thumbs down. Simple as, like
I don't know how you can put a trade on without knowing. How can you say the trade if you don't know how to?
But we'll be like Caesar. We just thumbs up or thumbs down. Do or die. That's it. Do a judgment on it. I don't know. People do though, don't they? They do. I'll tell you the truth. Even I do that, but I know roughly where my levels are. So I kind of already know where my stop's going to be. So I've already then worked out in my head roughly, or I already know as a rough idea, okay, I'm going to risk this much. It's probably going to be about 60, 70 pips. Yeah, give or take a few pips here and there. So I've got an idea. So I'll put the trade on quickly. And then I'll go to modify and I'll put the stop loss in and the target and everything else,
You'd be surprised how many trades you can lose if you've got proper risk management.
Yeah.
I'd still make money.
Yeah, exactly. Your hit rate could be 40%, but you make money. So just make sure you've put your stop in based on a trade plan. And if you haven't got a trade plan or any idea, and a strategy doesn't need to be something that you've been, copying from someone else or tried and tested over many months or years, or a strategy could be something that you've seen work a few times, and so you say, oh, you know what, I like the look of that. I want to give it a go. Okay, so that's fine. You want to give it a go, but you're still a bit nervous. So don't then put it on a demo account or don't do anything. Just watch it and forward test that. So forward test means, i.e. in other words, watch it play out and make a note of it. So you do some work on that. you don't need to get something that's been tried and tested over many months or years, because there's so many strategies out there. They all work. It's about how you implement it. So we're focusing more on the process and less on the actual, less on the actual placing of the trade, so to speak. So the placing of the trade should be the last thing that you do, and that takes seconds. And when people promote their services and they say, well, if you're busy and you have a full-time job, see you later, Tony. You can work. You can just scan the markets, set the trade up for 10 minutes, and put it on. It's done. It's like, yeah, because you've got a straight.
Every trade is a 50-50 shot.
Yeah, that's true.
It doesn't matter how many confidences you have. I mean, you could literally, if you've got proper risk management, you could literally flick a coin.
Yeah, that's true.
And whichever way it comes out, you take it.
Yeah.
If you've got good risk management, you'll be fine.
Yeah. So with risk management, that comes from having a trade plan and a strategy, and trying to do the same thing over and over, and recognising certain setups and plays. But yeah, just have a go. Put a trade on a demo account. Put it on and put a stop on and a target, and work out. Say got £10,000 or $10,000 of play money, and say, okay, I'm going to risk 1%, and do that. That's what you need to be doing. That's the process. All of that stuff. The actual trade itself is not where you should be putting all your energy. That should account for like 20% of the process, and 80% should be about everything else that you're continuously doing in the background. Making sure that you eat right, exercise, sleep properly, back testing, psychology, understanding what elements of your trading or your life you're struggling with. And it could be that work commitments or having children, family commitments is taking a fair amount of time, and it can be distracting. Or you could be in a poor relationship, and that could be quite a distraction. There's external factors like that may need addressing. They may be, you don't realise, but they may well be the reason why you're not having much success at this. So yeah, there's lots to it. It's a lot of real world stuff, real life stuff that can affect you. If you can somehow, you're trying to better yourself, and it goes hand in hand, and you'll see it reflected in your performance, in your trading success. So it all goes hand in hand. But if you can somehow get a leg up with your life and improve it, and improve your trading as a result, and everything's going sweetly for you, that's it. That's all you could ask for, really. You don't need to have millions to buy a Lamborghini, but you could make it a decent second income, or a bit of part-time trading, just to earn a couple of £100 extra every week to pay for the bills. And that's real world stuff. That's quite empowering. You could do this, or you could do anything online. Set up a little online business selling stuff. There's lots of opportunity now that we're able to go online and do it. And that's what I saw as an attractive opportunity for me, to no longer work for a company or an institution, to step out of that environment, not having to worry about wearing a shirt and tie. Although I do miss wearing a suit and looking all dapper, and and get a decent pair of shoes on and stuff. I don't mind doing all that every now and then. But the idea of it all, and the people that you sometimes have to work with, and not to be antisocial, but you just, sometimes it's nice to be able to take a break. When people say I need a holiday, well, for me, I kept saying I need I want to take a holiday, but I didn't want to take a week off or be restricted, because your boss is saying, well, you can take 2 weeks off. It's like, oh, well, thank you. What a luxury.
January.
Yeah, and January is actually a month where I always like to go away. I always go to look for warmer climates in January. Go somewhere warm and sunny on a beach somewhere, and Australia's good, Caribbean's good. You meet a lot of Canadians in the Caribbean. A lot of Canadians.
Yeah.
They pretty much take over. It's quite funny, and good.
Usually head down there in February.
Yeah, there you go. See, good bunch. So, so it's quite nice. But certainly 2 weeks. 2 weeks would be Would be nice for starters. It takes 2 weeks to kind of just wind down and chill and just not really look at charts or do a little bit here and there. But then it'd be nice to have another 2 weeks and make it a full month and take the whole of January off, and do that because you can. And obviously the only things that are going to stop you perhaps are family commitments or things like that. But then when the kids are off, if they have their summer holidays and things like that, you could then say, right, well, they're off now for the next 6 weeks or 8 weeks or whatever. I'm going to take that entire period off because I can. And we're going to have family time, and after the first week, going to be like, why did I agree to family time? Oh, these people are driving me crazy. I see them every day. And the kids, or whatever. I don't know. It's just each their own. But yeah, it's quite funny. So we're saying euro dollar to break up, use the support here. By the way, I wanted to share this chart because this has been looking quite promising. Yeah, and gold is just doing a nice little drop. I'm still looking for gold to tap 1800. It missed it by about three or 4 pips or so, depending on your spread. And yeah, and I missed cashing out down here. Yeah, I did on that one. I've got one position. I'm short of 34, and it's still open. I put my stop down at 18, and it didn't hit it for some reason. I don't know. It came up to 18. It didn't take it out. I've still got it on. It's still showing. So yeah, it's quite nice, really. Yeah, I shared that. I think I shared it in a Discord, or did I share it here? Results.
Well, I think
Yeah, there we go.
they're heading down to take out yesterday's low and the weekly low,
Yeah.
1800.46.
Well, I've had this on now for 3 days, since the 23rd. When it went down to the first support, my first target around 36, and then it broke that. So I put it on, and then overnight it just started going down, and into the early morning, it kept going. Tuesday, I think it was, maybe it just kept going down, and it tapped 0.34 or something down here. So it missed 1800 by a smidge, but you can see that here. It's a bit annoying, but then I was scalping. I was just scalping it and doing what I needed to do with it. And let's have a look. We did there you go. So yeah, not bad week really, and that's only like 3 days worth of trading. We've just been bagging, 80 big bags. It's quite good. That trade, do you remember the trade I took yesterday?
Yeah.
New Zealand yen trade, mate. Come on.
Yeah, that was a mistake. Do you know that? That was an accident. I was actually pressing these two together on my MT4. So above my gold, because they're all Forex pairs above, and then I've got gold just sitting below the New Zealand yen. And as I went to short the gold, I tapped this by mistake. And I was like, oh, bugger. Yeah, I pressed it on. Yeah, I was meant to be shorting gold, so that's why it's just so...
Come out all right as well.
Well, do you know, it's funny, I closed at 91. Had I waited literally... If I'd waited a minute more, it would have gone to... It went to 89, I could have closed it. But it did, I didn't mean to do it. Look, they're the 2 trades. Look, you can see the time as well. I took that by mistake, and I was like, oh, sugar, I put the wrong one on. It was meant to short this one. And, yeah, so it's quite funny, really. So, yeah, splash of red, just for good measure. It's all right. It's all right. So we just, yeah.
So these trades there, Alex, were they just basically adding to?
No, they're just scalps.
You...
Yeah, they're just scalps on this range. So when price was going up, so it went to the 50% yesterday, and we shorted it at. I said I got filled. I said yesterday actually. At 1586, and then it actually went down to about 08, and I went out. I went to pick up my kids and go and take them for pizza, and so I was driving and I didn't look, and then it went down to like 11, and I thought, okay, it's about 40 pips, so we'll take that. But it had gone down another 30, and it was a nice little. See, sometimes it's just better not to watch, just to put your trade on, step away.
I call it.
Yeah, people say it all the time, and it does. It's relevant, isn't it? So you see stuff like that happen. It makes a move, and then you snatch at it. Whereas if you're not there, it moves, and then it just leave it for a minute longer, and it might just give you a little bit extra, and you end up squeezing another 20, 30 pips out of it. And it's like, oh, that was good. This is another life changing amount of money that you can now, I don't know, pay for your hair and makeup. Whatever, I don't know, but yeah, there you go. So yeah, it's going all right. It's been going all right. We've been sharing some good stuff. There's been some really good things on the go. We've done all the analysis. That's all been playing out really, really well. The 764.
Martin,
Yeah.
Yes, sir.
Martin, yesterday you mentioned you thought there'd be a retracement to the 50.
Oh yeah, that's right. What did you mean yesterday when you said that?
No, I just think eventually it's going to retrace up to there before it came down further. But
What 50% is what I couldn't remember which one you said.
50% of that move down, the big move
Oh
down.
yeah.
Big move
Mm.
from 1880.
Yeah, it's fairly normal to fill in a gap like that.
Yeah.
At some point,
So this
nothing
one.
happens instantly. I mean, I shorted gold in the London session this morning when it just took out yesterday's high, so I shorted it there. I did the same thing with pound dollar, and I did the same thing with euro yen. It's all worked out okay.
So yeah, this is an example. Fibs, plot your range, find out where the retracement up would be. So we're looking at somewhere like 1840, back up to previous sort of price structure. Quite some nice structure there. And 1840 would be a 50% retrace of this current range. It's done best part of an 800 pip move. So 1840 makes sense as being a 400 pip retracement. I was looking for the 38.2 at somewhere like 1830, but with it now being the seasonal few days holiday, it's just not got the buyers. They're just not going to step in over the holiday season to try and take gold long, or it's not. They're not doing it. Weren't sure if they would or not, but they're not. So I'm still waiting. As far as I'm concerned, my bias hasn't changed. I'm still bearish. I'm still looking for 1800s, and I'm going to hold a position and wait for it to break. And
Yeah,
simple as that, really.
because we're creating on a 15-minute chart. We're creating a nice little consolidation area.
Yeah.
And the bottom of that area is, I think, 1801.70 somewhere around there.
Yeah.
So, and then you've got the weekly low just below that. So it's 1800.4. So hopefully we're going to crack down today and crack that.
So someone's asked about MyFX books. I did the MyFX book at the beginning of the year. We did it at the start of the year because it was the new year. We said, let's link an account up. So we linked one of our accounts up. We put 500 in, and we linked it up. And then we had the Black Swan event. We had the whole, COVID thing going on, and the markets just sold off. So we just shorted the crap out of the stock markets, like the US Dow Jones, and we did. And then I showed the withdrawal, like we hit 50% in 3 months. So we did 50%. It wasn't in 3 months really, it was like 6 weeks or so of all that kerfuffle. Because we traded the last recession, so we had a setup, and it was good, and we recognised it, and we traded it hard. And we had massive stops, small risks to allow for big stops in case of these big swings, and we weathered it, and we just kept shorting every time it retraced, short, having 3-4 positions, and we did 50%. And I showed those. I did show those to my group. If you go into my Telegram groups, you can just scroll up, or you ask anyone, they'll show you. And then we did a withdrawal. We showed a withdrawal. We withdrew just over 250 grand, 255 grand withdrawal off that money, off that bit of price action for 4 or 5 weeks work, which was quite nice. And that was it really. Didn't need to worry about that because then we were set up for the year. So my FX book, don't need it. I'm not looking for investors. Don't need to show it to anyone. Don't need to prove anything to anybody. Just be thankful what I'm sharing with you now, because you know, maybe next year I won't be bothered again. I'll be like, all right, once lockdown's off, I might just go and be off and go and live somewhere and find some sunshine. And because I haven't been on holiday, and it's I'm getting withdrawal symptoms. It's like I want to be somewhere else. You know, yeah. So, but on that note, being somewhere else, I've got to go. And really nice talking to you guys. And I think this has been shared. So we'll upload this stream. There's a lot to be had and learnt from it, and hopefully you've benefited a little bit from it all. And
Oh, by the way, Alex, where are the streams shared? Where can we?
oh, normally it's Chris's YouTube channel. This one I think will be on my. This will be my YouTube channel, and yeah, let's have a look. Where's my YouTube channel? Have I got? I've got one here. Right, let's have a look here. My channel is this. Is it? Is that it? Yeah, I'll just put the link out there so you can find it because we'll put it on there. Yeah, so I'll share it now in the.
Clearly, you're not looking to monetize off YouTube, are you?
Monetize? Yeah, I don't think we'll monetize. I think you're talking about pence, though, aren't you? Of all this stuff. I don't know really, but no, YouTube's a really good place to put stuff and house it. And I tell you what you can do is better than all of that. I've got a website. On my website, it's got everything, and on that, it's got all my social media links, so you can check me out in full to know who you're talking with, where I've been, what I've done, and that's just tradeyourway.co.uk. And if I post that here in the chat group, then you'll have that. And I'll leave this forum open for a little while, and I'll stop. There we go. Trade your way, and that's it done.
By the way, it's 32 degrees tomorrow in Melbourne.
Yeah, but you'll get snow in the afternoon because it's Melbourne. So there you go. Just as you go and get your shorts on and go do a bit of surfing, you'll have to go back in.
You're lying down in shorts and cut-off sleeves.
Yeah, good. It's actually cold here, and it's grey, and it's going to be a cold weekend. Well, cold. It's you know, you're feeling it. It's 8, 7, 6 degrees, whatever. It's cold enough. It's like sitting in the fridge. It's not nice. There you go. All right.
4 degrees and fog. Feels like 2.
Good. Not good. All right. See you guys.
Playing golf or something.
Yeah. I'm gonna leave. I'll leave this on. I'll just mute my mic, and I'll be back later. All right then. Thanks.
Okay.
Bye.
Thanks, see
Bye.
you.
Bye.